Episode 2, Introduction to Stock Market. What is stock market? It is a marketplace where publicly traded companies' shares are bought and sold, or it's a platform where people can buy or sell stocks or shares of a company, and the value of the shares fluctuates based on the performance of the company and the demand and supply of the shares. Investors can buy stocks in various ways, including through stockbrokers, online trading platforms, or through mutual funds or exchange-traded funds (ETFs). When a person purchases a share in a company, they become a part owner of that company, and their investment rises or falls based on the company's performance. The stock market is often used as a barometer of the economy's overall health, as it can reflect changes in consumer sentiment, political factors, and economic performance. Investing in the stock market can be a high-risk, high-reward proposition, and it is essential to conduct research and understand the risks involved before investing. It's also important to have a well-diversified investment portfolio to reduce the overall risk. The Indian economy and stock market are closely related. Factors such as interest rates, inflation, GDP growth, government policies, and global events can impact both the economy and the stock market. For example, if interest rates are low, it can encourage borrowing and investing, which can stimulate economic growth and drive up stock prices. Similarly, if the government implements policies that are favorable to businesses, it can boost the stock market and the economy as a whole. In India, the stock market is represented by major indices such as the BSE Sensex and NSE Nifty, which are widely used to track the performance of the stock market. The performance of these indices is closely watched by investors, analysts, and the media as an indicator of the state of the Indian economy. What are the needs to invest? Potential for long-term growth. Historically, the stock market has provided higher returns than other investment options, such as bonds or savings accounts. By investing in the stock market, an individual has the potential to achieve long-term growth and build wealth. Diversification. The stock market offers investors the ability to diversify their portfolio by investing in a variety of companies across different sectors and industries. This can help to spread out risk and reduce the impact of individual company performance on the overall portfolio. Income through dividends. Many companies pay out a portion of their profits as dividends to shareholders. By investing in stocks that pay dividends, an individual can generate income on their investments. Protection against inflation. Investing in the stock market can offer a hedge against inflation, as the value of stocks tends to increase over time with inflation. Access to global markets. The stock market provides access to a wide range of companies across the world, allowing investors to take advantage of global economic growth and opportunities. In India, the capital markets are regulated and overseen by several market intermediaries and regulatory bodies. Some of the key market intermediaries and regulators include Securities and Exchange Board of India (SEBI). SEBI is the primary regulatory body for the securities market in India. It oversees the functioning of stock exchanges, regulates the securities market, and works to protect the interests of investors. Stock exchanges. In India, there are two major stock exchanges, the National Stock Exchange (NSE) and the Bombay Stock Exchange (BSE). These exchanges provide a platform for companies to list their shares and for investors to buy and sell securities. Depositories. The two depositories in India are the National Securities Depository Limited (NSDL) and the Central Depository Services Limited (CDSL). They act as intermediaries between investors and companies, allowing investors to hold their securities in electronic form. Brokers and sub-brokers. Brokers and sub-brokers are intermediaries that facilitate transactions between investors and companies. They are registered with SEBI and work on behalf of investors to execute buy and sell orders. Registrars and transfer agents. Registrars and transfer agents help companies to maintain records of their shareholders and manage the transfer of securities. Ministry of Finance. The Ministry of Finance oversees the functioning of the capital markets and formulates policies and regulations to promote growth and development in the financial sector. Next episode. Why companies go for public offering.